What's up, everybody? This is Sunko, the Korean Bro. Today is 2024. Hmm. Let's see. Apple's iPhone sales in China fell 24% year on year in the first 6 weeks of 2024, according to increased competition from domestic rivals such as Huawei. The U.S. tech giant chief competitor in China in premium smartphones, Huawei, saw unit sales rise by 64% in the period, according to report. This could fan fears of a slowdown in demand for a U.S. company whose revenue forecast for the current quarter was $6 billion below Wall Street expectations. Shares of the iPhone maker were down 2.2% in pre-market trading on Tuesday and have lost about 10% of their value so far this year. Was second place in the year-ago period when it had 19% market share. Huawei rose to second place as its market share expanded to 16.5% from a 9.4% a year earlier. The overall smartphone market in China shrank 7%, the report said. Apple faced stiff competition at the high end from a resurgent Huawei while getting squeezed in the middle on aggressive pricing from the likes of Oppo, Vivo, and Xiaomi. Counterpoint senior analyst Meng Zhang said Apple began subsidizing certain iPhone models by as much as 1,300 yuan last week through flagship stores on Tmall, Alibaba's major marketplace platform. Huawei has seen a resurgence in its premium smartphone sales since it released its Mate 60 series in August after struggling for years with U.S. curbs on the exports of key components to the company. Honor, the smartphone brand spun off from Huawei in 2020, was the only other top 5 brand to see unit sales increase during the first 6 weeks of the year, up 2%. So, competition, the domestic market of China is getting fierce. That's what it is, okay? Okay, worth teaching. Okay, this is the takeaway. Everywhere you turn in financial markets right now, there's a trend that feels worth chasing. As Yahoo Finance Julie Wama recently wrote, number go up. Phenomenon isn't just limited to crypto right now, but arguably the only form of trade worth chasing right now, or ever, is saving for retirement, even if it feels like the least exciting thing an investor can do. Okay, it's about retirement saving. Mm. Okay. Stocks closed lower Monday as Dow Jones component Apple fell on a massive fine. Uh, okay. Magnificent Seven stat Nvidia popped while supermarket computers soared. Meanwhile, Kathy was snapped up. A plunging stock in the three Warren Buffett stocks traded near entries on the stock market today. In addition, a couple of other noteworthy stocks are also trading near buy points. Rollins tested on entry while Fortinet is near the top of a base. Stock market today, Nasdaq falls, small caps reverse. Tech-heavy Nasdaq index tried to rally but ended the session down 0.4%. Workday was among the worst laggards. It fell 6.5%. It flashed a sell signal by gapping below the 50-day moving average in high volume. The benchmark S&P 500 reversed lower as it fell 0.1%. Hewlett Packard Enterprise stood out among the peak, surging 10.2% as it extends gains from its earnings rally. S&P 500 components actually closed mixed with a slight positive bias. Communication services and consumer discretionary lagged most on the stock market today. Real estate and utilities, the latter a defensive area, were the strongest sectors. Small cap saw gains melt away as Russell 2000 fell 0.2%. Growth stocks also succumbed to the bears, with Innovator IBD 50 ETF sliding 0.8%. The 10-year Treasury note rose 4 basis points to 4.22%, while the 30-year gained 3 basis points to 4.35%. Apple was among the worst performing those stocks as it fell 2.5%. A news the European Union is fining the company $1.95 billion. You can see catching a falling knife is always a dangerous strategy for an investor, but ARK Invest chief executive Kathy Wood was at it again as she piled into a couple of plunging names. The firm bought nearly 2,100,000 shares of biotech stock, Ginkgo Bioworks for the ARK Innovation Exchange traded funds, as well as additional shares for the ARK Genomic Revolution ETF. The penny stock fell 2.3% as it trade and is trading around 51% below its 2023 high of 2.55. It is down even more, or 92% from its all-time high of 15.86, which it reached in 2021. Among other moves, AF bought almost 290,000 shares in Arch Aviation, which itself is down around 40% of its 2023 high of 7.49. Bear in mind, Investors Business Daily does not recommend buying stocks priced under $10. It is difficult for retail investors to find quality stock trading that level. Okay. Next. Let's see what it says. Coach sticking with the trend of great companies, expensive prices. Costco fits this category. Or it's also a completely different investment style than the other two, being a commerce store. Costco has been a market crushing investment for some time, thanks to its strong execution. Costco isn't going to light the world on fire with amazing growth. We will consistently grow its earnings at a pace greater than 10% over the long term. By growing its earnings faster than the 10% threshold, Costco is well positioned to beat the market, but at 51 times trailing earnings and 48 times forward earnings, um, it's unbelievably expensive and trades far above where it normally does. Okay, let's read this one. What's going on with Palo Alto Network stocks? Hmm. Meta Platforms and Baidu. Uh, the one AI semiconductor stock to buy right now, if I could own just one semiconductor stock right now, it would be Taiwan Semiconductor Manufacturing. TSMC is the largest contract chip manufacturer in the world. They both big clients, including Nvidia and Apple. So Nvidia and Apple are like customer of TSMC. Okay. What makes TSMC an attractive company to own is that it has a sustainable competitive advantage. It's developed the processes that only one other chip manufacturer can compete with. Uh, it currently sits years ahead. TSMC's advantage creates a virtuous cycle because it's able to manufacture chips for big companies like Nvidia and Apple at scale. It wins an outsized portion of contracts. It gives it the capital necessary to reinvest in the next generation processes to win the next group of chip designs. Instead, developing leading edge chip manufacturing methods isn't just a matter of throwing more money at the challenge. There are numerous technical hurdles involved, and that requires management to prioritize the various areas where its processes could be improved. TSMC's longtime CEO, CC White, has done an exceptional job of that. So AI will drive results in 2024 and beyond. The growing use of AI can only be sustainably supported by more powerful, energy efficient chip designs that requires leading edge chips like the ones only TSMC is capable of producing. The result management believes the value of TSMC technology position is increasing. We're all well positioned to capture the major portion of the market in terms of semiconductor component in AI. As noted on the company's fourth quarter earnings call, that's already playing out in the interest levels. It's seeing for its next generation N2 designs. Management said customer interest and engagement for N2 is much higher than it was for N3, a similar stage of development. TSMC expects to start volume production for N2 in 2025, ramping up in 2026. Executives see AI related applications driving substantial growth for the business through 2027, going from a single digit percentage of revenue today, the high teens. This guidance is an increase from a previous comments. The AI would account for a percentage of revenue in the low teens. When asked to confirm the high teens guidance, we responded or higher. Compared to the high flying semiconductor stocks, TSMC is relatively cheap. Shares traded for 22.5 times analyst consensus estimate for 2024 earnings. That's in line with the S&P 500. While the stock has produced exceptional features, returns at the start of the year thanks in part to its strong earnings results and favorable outlook, there's still room for shares to climb higher as AI propels TSMC's growth long term. So it's about TSMC. They mainly produce something that relates to chip design, and their main customers are Nvidia and Apple. Okay. Hmm. Okay, let's read this one. Signs of the new AI boom are suddenly everywhere again. Stocks are soaring again this year as recent results from a companies like Nvidia and Supermicro Computer have blown past analyst estimate as cloud infrastructure companies and AI startups dramatically ramp up spending on AI hardware. Further, for AI stocks has gotten so heated that even stocks that Nvidia has invested in, like SoundHound AI, have surged when the news of Nvidia's stake broke. Those soaring stock prices have led some to fear that an AI bubble is forming. Wharton professor Jerome Sigal said that a speculated bubble could be starting in stocks like Nvidia. Other respected investors like Jeremy Grantham and Jeffrey Glanton have made similar proclamations. However, if you are questioning the magnitude and sustainability of the current wave of demand for AI infrastructure, this quote from a TSMC founder, Morris Chang, should help convince you otherwise. At a recent conference in Japan, Chang described the demand his company is seeing from its customers for AI computing power, saying, "We're not talking about tens of thousands of wafers. We're talking about fabs. We need to. We need so many fabs. We need 3 fabs, 5 fabs, 10 fabs." Hmm. Report, which was originally Nikkei, said that Chang also said he believed demand was somewhere between tens of thousands of wafers and 10 fabs. If you're unfamiliar with TSMC, you should know that it's the world's biggest contract manufacturer of semiconductors with more than 50% market share. It has about 90% market share of advanced contract chip manufacturing, which has become even more in demand in the AI era. TSMC Taiwan Semi handles production for companies including Apple, Nvidia, Broadcom, AMD, and many others, as most chip designers now outsource their manufacturing to foundries like Taiwan Semi. When its founder makes statements like the aforementioned one, those sentiments also echoes one from other tech titans, including Oracle co-founder and CTO Larry Ellison, who has said that generative AI may be the most important new technology ever, and said demand for AI computing power from Oracle was over the moon. Hold on, Diego. Hold on. You might not recognize Diageo's corporate name, but if you are 21 or older in the United States, you've probably enjoyed its products. The beverage maker owns several global Sprite, spirits, and alcohol brands, including Guinness Beer, Johnnie Walker, Tranquil Valleys, Captain Morgan, Crown Royal. The Egg Geo is in a prominent position for Buffett. At only $34 million, it's a rounding error on Berkshire's portfolio. He bought the stock early last year, one of Berkshire's most recent ends. cultural staple, and many of Diageo's brand go back centuries. It's a company you can probably expect to be around 100 years from now, which might be why it appealed to Buffett. It'll be interesting to see if he expands his Diageo stake over time. Okay, this is it tonight. I'm getting really tired tonight. I need to go to bed. See ya and have a good night, okay? Bye bye.